Hello and welcome to this YouTube channel for ACCA FR exam prep. My name is Adam. In this video, I'll be taking you through how to account for financial assets measured at fair value through OCI. Fair value through OCI. Now let's look at this example. I'll start with the requirement. In respect of the financial asset or speculate, what amount will be included in other comprehensive income? So OCI for the year ended 30th September 20x3. So let's see. Now speculate is preparing its financial statement for the year ended 30th September x3. The following issues are relevant. So it's an extra from all the other issues, but because there is emphasis on financial asset measured at fair value to OCI, I've extracted these to illustrate the point. So there are several other information which I've left out. So let's look at this. Now we have shareholding A long-term investment in, so long-term. So it means that not for trading. So long-term investment in 10,000 of the equity shares of another company. Now these shares were acquired on 1st October 20x2. So to the year end, that will be 12 months. At a cost of $3.5 per share. Transaction cost of 1% of the purchase price were incurred, and at 30th September x3, the fair value of these shares is 4.5. Now, the principle is that measure at fair value at initial measurement. And the fair value here should be equal to the cost of shares plus transaction cost. And the subsequent measurement, which is the year-end measurement, is that you also have to measure at fair value. And the fair value will be the value or the price of the shares at the year end. Now let's put this together to solve the question. So it means that on 1st October 20x2, the shares would be the cost, which will be 10,000 times 3.5, and that should give us 35,000 plus transaction cost. So the transaction cost we're told is 1%. So 35,000 times 1%. So let's see, 35,000 times 1%. And that should be 350. So the fair value of the shares at 1st October is 35,350. Now at the year end, which is 30th September 20x3, we say we measure at fair value, and that fair value would be 10,000 again, that's the number of shares, times the year end valuation, which is 4.5. So 4.5, and that should give us 45,000. Now on this basis, the fair value gain on the shares will be 45,000 minus 35,350. So let's check that. 45,000 minus 35,350. That is 9,650. And this is the gain. And because these shares are for long term, their measurement will be fair value through OCI. So what it means is that the entity will take what we call the irrevocable election. It is an irrevocable election to measure the shares at fair value through OCI. It means that the subsequent fair value measurement will not go to P&L, but will be reported in OCI. So the amount that will be reported in OCI should be, which is the option A, 9,650. So always remember the fair value measurement at the initial date, the date of acquisition. It is the cost incurred plus the transaction cost. And also, if there are some discounts received, you deduct those discounts to get the fair value. And at the year end, you measure at fair value. And when you compare the two fair value measurements, you get a gain or loss. And this gain or loss will be reported in OCI. I hope this helps you in your preparation for the FR exam. Please subscribe to this channel to receive updates on new videos.